Assalamu alaikum. Welcome to lecture 13 of SBR. The standard is IAS 23 borrowing cost. This is a small standard and we just have one question, very simple. And in your exam, if you come, try to score the marks from it. Because small standards are often the easiest. They are easy to remember. The rules are very simple and not many questions are also there to practice. So it reduces the scope of testing this type of standards in various ways, right? So that's a good thing. Now, here we are going to focus on the definition, the recognition, the capitalization period, specific and general borrowings, and disclosure. Starting with the definition. Definition is very simple. Borrowing costs are defined as interest and any other cost that entity incurs in connection with borrowing of the fund. For example, when we take a loan, it's just not the amount of the loan that we take it as a borrowing. With that, we add interest cost and also other costs, various costs are there. All together is known as borrowing cost. It's just not the amount of the loan. Understanding? So that is known as borrowing cost. Now coming to IS 23, they say this borrowing cost, normally what do? We take it as an expense, right? Loan goes in the statement of financial position as under long-term liability. The interest part goes to profit and loss as an expense, finance cost. But in IS 23, they say borrowing, you can capitalize this borrowing cost. You can capitalize the borrowing cost, but there is a condition. What is that condition? The condition is if it relates to acquisition, construction, or production of a qualifying asset. You can see it's in bold. There's a reason why I've highlighted it in bold. Because not all the borrowing costs are to be capitalized. Only those borrowing costs, okay, if it relates to acquisition, that means if you have to buy something, if you have to go for a construction, or you have to produce a qualifying asset, then you can capitalize those borrowing costs. What is a qualifying asset? Qualifying asset is any asset that takes a long period of time for it to get ready for the use or to sell it. Mostly it's more than a year, more than 12 months. Okay. Capitalization period. There is a time also till when you can capitalize. You cannot keep on capitalizing it forever. There is a period. And there are period when this ceases, when capitalization actually stops. You need to know both. Okay. So borrowing cost should only be capitalized when the construction is in progress. Okay. So capitalization of borrowing cost should commence when all of the following apply. All this has to be there for you to capitalize the borrowing cost. Number one, expenditure for the asset is being incurred. You have incurred some expense for that asset. Second, borrowing cost. You have already got the loan. Third, activities that are necessary to get the asset ready for use are in progress already. See, it's not something that you are saying, I will start. You already have to start. You have started the process. It's in the process now. Right? Capitalization of borrowing cost should cease when all the activities that are needed to get the asset for ready for use are done. Now the asset is completely ready for use. That time, capitalization of borrowing cost also stops. You cannot capitalize after that period. And for a temporary period, you can suspend the capitalization of borrowing cost. For example, there might be some disruption, right? The activity stopped in between, let's say maybe for a month or 2 months or a week. During that time, there will be no capitalization of borrowing cost. After that, you can start again. You understand? It is temporary. Capitalization will stop. Now, moving on to specific and general borrowing. When a loan is taken specifically to finance the construction of an asset, okay, the amount that you have to capitalize is the interest payable on the loan minus any income that you have earned on the temporary investment of the borrowing. This you will understand through questions, through numbers. But if the loan is a general loan through which you have financed, then you have to use a weighted average. Okay, the borrowing cost that you can capitalize. To capitalize it, you have to apply a weighted average. That means out of that general borrowing, how much of it are expense are spent on the asset, on that asset that you are about to construct. Only up to that portion, that average, that weighted average, let's say 30%. Out of that general borrowing, 30% you have used to construct that asset. So only 30% of it you can capitalize of that borrowing cost. That is the meaning. Now we are moving on to disclosure. You need to disclose two things. Number one, what is the value of the borrowing cost that you are capitalizing? Number two, the rate, capitalization rate. So that's it for IAS 23. I told you this is one of the shortest. Now we'll be doing one question to end this lecture. Test your understanding 3, high rise. Okay, so you are supposed to discuss the accounting treatment here. Dates are very important here, okay, in this standard especially. So on 1st of Jan 2001, they obtained a planning permission to build a new office building. Construction commenced on 1st of March 2001. They have taken a loan of 5 million for this on 1st of April. Interest was 10%. Construction ceased during the month of July, only for 1 month. And by 31st December 2001, building was still not complete. The cost of the building was 12 million. It excluded all the interest on the loan. Okay. So now tell me, according to IAS 23, how will you account for this? When should you capitalize? When is the capitalization period? First, you need to understand. See, don't start capitalizing. You have to understand which type of asset is it. Because you can only capitalize for a qualifying asset. So first see the asset. Is it a qualifying asset? What type of asset is it? We are getting a planning permission to build a new office building. See, office building, this is a qualifying asset. I will put a star mark. Okay. Star mark. Something went wrong here. Okay. Okay, I'll write here. Not an issue. You first need to check in your exam also. Don't start capitalizing immediately. Check the asset. If the asset is not a qualifying asset, for example, a car, you have taken a car. Can you capitalize borrowing cost for a car if you're taking a loan on a car? No. You are taking a ready-made car. It is already built. You are not constructing it. It's not taking a long time to get ready. So it is not a qualifying asset. So you cannot capitalize it. You take the entire amount as an expense. Okay. IS 23 says this is a building and building takes a long amount of time to get ready, right? So it's a qualifying asset. First understand this. Why I'm not able to write here. Okay, so it's a qualifying asset. Okay, then time. You cannot take the borrowing period, the capitalize for entire 1 year. When is the time? See, there are 3 conditions that needs to be met to capitalize. Number 1, expenditure on asset. When did it incur expenditure on asset? Which date? Tell me. 1st of March, because it construction started. Construction means expenses on building. So 1st of March. Second, borrowing cost. When did it incur the borrowing? Did it incur the borrowing cost? All 3 conditions has to be there, by the way, not just one of it. Borrowing. When did you take the borrowing? You took it on 1st of April. 1 month after. Third condition is and activities necessary to prepare the asset for intended use. Preparing asset for use. This was on 1st of Jan. Why? See, you have obtained a planning permission to build a new office building. This is the activity that you are taking to prepare the asset for its use. Okay, because without this activity, if you don't get a planning permission, how can you build a new office building? You first have to get, it has to be done. Planning permission has to be there. So it's a necessary activity. You cannot avoid it. Only those activities which you can avoid are not taken as necessary activity. This you cannot avoid. It is done on 1st of Jan. Now check, when will this 3 be satisfied? The latest of the 3. That is 1st of April. So the capitalization period starts from 1st of April to 31st December. But hold on guys, there is 1 month that it was not in use, ceased during the month of July. So out of this, cut the month of July. First count how many months. April, May, June, July, August, September, October, November, December. 9 months. Out of 9 months, 1 month goes. So you are, because July month you are not using. So only you are left with 8 months. So you can capitalize for 8 months only. You understanding? So now you just have to do the calculation. Okay. The total borrowing cost. So the amount of the loan is 5 million and interest is 10%. Okay. So with this in mind, just do the working. 5 million into 10% into 8 over 12. If you get it, the total will be, all are 3. 6 threes are there. Okay, now you need to add this because this is capitalized. That means you have to add this cost with your asset of building. How much is your building's worth? 12 million. So with this 12 million, you have to add this because it is capitalized. So you add 12, 6 zeros are there. It will be 12, 3, 3, 3 and 3, 3, 3. 12 and then 6 threes. So this should be the carrying amount of the building on 31st December 2001. And one more thing that you have missed. What is it? What about depreciation? This is a building. Tell me depreciation. Should we depreciate or not? I am sure majority of you will go for depreciation. Yes, you have to depreciate. But if you are thinking like that, then let me disappoint you by saying no, you don't depreciate in this case. Why? Because you didn't read the case study properly. They told, see, by 1st of April, okay, by 31st December, the building was not complete. So if an asset is not ready for use, you cannot depreciate that asset. If you're confused, go back to your IAS 16 under depreciation, the methods of depreciation, the rule for depreciation, you will get it there. If an asset is not ready for use, you cannot depreciate that asset. Therefore, you do not depreciate. If it was ready for use, yes, you can depreciate it from the day it was ready for use. Okay, so that's it. Now let us summarize IAS 23. So now let's come to the end of IAS 23. Starting with recognition, we told you only capitalize borrowing cost if it's for a qualifying asset. Qualifying asset means if it takes a long period of time to get ready for use, like buildings or like that. Coming to specific and general borrowing. If it's a general borrowing, you need a weighted average. That means out of that general borrowing, see, general borrowing means that borrowing could be used for various purposes, 1 or 2 or 3 purposes. Out of that, how much you can capitalize? That is known as weighted average. Maybe let's say 20% or 30%. Examiner will give you in the exam. What is that weighted average? What is that percentage? That is incurred for this qualifying asset. Only that much you can capitalize, not the entire borrowing. And if it's a specific borrowing, you can capitalize it, but it is the amount to be capitalized is the interest payable on the loan minus any income earned on the temporary investment of that borrowing. That's the only difference. Here there is no weighted average because that borrowing is only for that qualifying asset only. It is specific. Go by the word. General, yes, you need a weighted average. So in your exam, what you need to see is the type of borrowing, whether it's just general, then use weighted average, they will give you, or whether it's a specific. Okay, and recognition, look at the asset. Sometimes they might confuse you. They will give you an asset and you might go and incorrectly capitalize, whereas it should be taken as an expense in the P&L, not capitalized, because the asset was not qualifying. So first starting point in IAS 23 is qualifying asset or not. If it's a qualifying asset, then only you follow the rule of IAS 23. Otherwise, no. Okay. So that's it for this lecture, and I will see you in the next lecture. IAS 24 related party transactions.